Hello, everyone. Welcome to Kryptonized, the show where we explain what's happening in the crypto world, but usually from a token perspective. In today's case, a platform and exchange perspective. So I'm very excited, and I know Amanda, my co-host, is as well, to introduce Richard Byworth. And before we jump in, Richard, could you give a quick bio on yourself? You are the CEO, is that correct?
That's correct, Mark. And thanks for having me. Yeah, I'm the CEO of EQONEX. Myself, I came from traditional finance. So I worked in investment banking for about 18 years. I was a trader, and then I ran distribution for a group called Nomura, the Japanese investment bank. So I ran distribution across Asia-Pacific product globally. On derivatives, convertible bonds, Delta One, and futures and options. So I moved into crypto about 3.5 years ago. Started up the company. We were previously called Diginex. We recently rebranded to EQONEX, and we present a full ecosystem of offering for anybody looking to touch the crypto asset space.
Okay, and just for everyone's perspective, especially our U.S. audience, what are all the things that you guys do, and are there anything that's available to U.S. investors or users?
Yeah, so we offer, as I said, the broad range of crypto assets. So it really allows people to either touch the asset directly, touch a derivative of the asset, touch a listed product version of the asset, or actually get exposure to the unique alpha that's available in this asset class via our fund.
But yields are down and the dollar has fallen. This is all somewhat supportive for equities. And yet I'm wary of a pullback. At those elevated levels and with a very positive first half of the year, it seems that we need more strength to carry on. And I'm also looking at copper futures, which are failing to reach new highs, and they usually serve as an indicator of a healthy economy or not. On that weakness, alts seize the opportunity and outperform. So a variety of coins continue to rise, bringing healthy returns, while Bitcoin kind of disappointed. So Terra, Polkadot both rose 10%, The Graph and Kusama 5%, and then Ethereum, Cardano and Chainlink either did 1% or stayed flat, but so comparatively better than Bitcoin that fell 4%. Now, probably the most important piece of news that came through this weekend is a new provision included in the US infrastructure bill to expand the tax code's definition of a broker. Ultimately, this is done to make sure that players in the crypto industry, like miners, brokers, lenders, etc., need to KYC their users, and then those users can be identified and taxed more efficiently.
Now, in terms of US investors, our US investors can participate, obviously, in our stock. We're listed on Nasdaq under the ticker EQOS. The company name is still Diginex Limited, but we will be rebranding all of that shortly. The group is referred to as EQONEX today. We also are about to open our fund to US investors. So we'll have a US feeder structure to that multi-product fund that is exposed to all the various different types of alpha. And maybe I can explain alpha in simple terms. Alpha is really sort of what we call free money just lying around in the space. So, for example, Bitcoin might be trading on Equonex at 35,000. It might be trading on Coinbase at 34,000. So you get dollars on Coinbase, you can buy Bitcoin. You've got Bitcoin on Equonex, you can sell Bitcoin, and you take that free $1,000 out of the trade. And this is what we do. We invest in managers that do these sorts of types of strategies where there is risk-free money available. So it's risk-free return profile. There is a bit of directional exposure to it, which means if the asset class is rising, you do get a little bit of a tailwind to the performance. To give you an idea, the last year for the fund is up about 126%. We also have a multi-venue trading platform. That means we allow people to trade on Coinbase, Kraken, Gemini, as well as Equonex through a GUI, which allows you to do some of these trades yourself. So we have a platform, and US users can use that platform to access multiple different venues from the same one-screen trading platform which gives you a load of different trading strategies and ways to access the product.
No, the irony hasn't escaped me that I can invest in you through Nasdaq, but not as a U.S. citizen. And the reason for that is why?
So for us, what we're building for this industry is for the long term. We want to make sure that everything that we do is in the best possible way that we can do it. And that is, if we want to be listed, where do we want to be listed? We want to be listed on the very best market for technology and liquidity, for new and advancing technologies. And that's Nasdaq, no question. So from our perspective, we wanted to have the governance and oversight that comes with a listing. And Nasdaq, obviously, as SEC approval and Nasdaq approval is something that comes alongside these things, is essential for us when we're looking at getting listed.
Okay. And do you foresee a time when people in the U.S. would be able to invest or to work with your platform anytime soon?
Yeah, I think it'll be probably early next year. Will be when we're looking at coming to US shores with all of our product set. So I hope that'll be as quick as we hope.
Can we take a deeper dive into the regulation part of your crypto? So I think there's there's a debate here of that no longer being decentralized finance, but then you also have the pros of helping with taxes, this, that, and the other. So could you do a deeper dive for us and elaborate on what governance means with regard to your token?
So I'm not talking about a token here. I'm talking about governance of the platform. Obviously, we've seen a number of issues in recent weeks and months where you've seen two brothers in South Africa run off with $3.6 billion of crypto because there was no oversight around what they were doing. There was no governance around their key security and what they were doing. So the CEO and the COO, or whatever their roles were, could just run off with the assets. In an organization that is governed to Nasdaq standards of governance, I can't even touch the assets on this platform. Like, I have no way of getting access to it. We have about 16 people involved in the process. All of them are checking on each other, depending on the size and scale of the transaction. So we're talking about withdrawals and deposits at this point. So it's about having that oversight. So you have multiple eye checks on large transactions that are going out of the organization. And this is basic stuff. It's what happens in banks across the world. You make sure that large transactions are authorized by multiple people. And this is what we have. And it's a core requirement when you think about governance and Sarbanes-Oxley and the requirements that come with being a Nasdaq listed company. So that's what I'm talking about when I'm talking about governance.
Yeah, and that presents quite a few issues I'm sure you're aware of. I mean, there's quite a few people in the crypto community that don't want governance. They want a decentralized system and they don't want any big brother looking over them. So how do you respond to those people?
Look, I think that the great thing about crypto is there's this place for everybody in it. And, if you want to look after your own assets, and secure your house against possible theft and people coming to your house, that's absolutely fine. We've built a platform for people that are not comfortable with that sort of risk. And institutions cannot be comfortable with that sort of risk. They have a fiduciary responsibility to their investors to make sure that they're using a secure, regulated, and well-governed custodian for their assets or platform for the trading of those assets. So what we've built is really for individuals and institutions alike, but on the individual side, it's about people that don't want to be dealing with those assets themselves. I'll give you another example. If you're a holder of Bitcoin, what happens if you die?
Well, if you don't have the keys somewhere in some sort of custodial account or somewhere in a safe spot and people know about it, you've just lost it.
Yeah, and your wife, husband, and kids don't get the assets that you've been holding on to for however long it might be. And we see a lot of this. We see a lot of people losing those assets because what do you have to do? You have to make sure it's all written down somewhere. So then you've basically just breached your security elements. And if you don't do that, then you need to make sure that your partner or your kids are well enough educated around being able to get hold of those assets in the event that something happens to you. So it just adds a level of complexity that a lot of people don't want to deal with. And so, I store my Bitcoin in our custodian, Digivault. It's regulated out of the UK. It's accredited. It's certified for different levels of cybersecurity. It has Ministry of Defense accreditation. It has insurance. And it's run by a team of ex-Ministry of Defense specialists. So I feel far more secure with them looking after my assets than indeed myself or my wife having to deal with it in the event that something happens to me.
I think most people don't mind that. I think where they come in and they complain is, and we've seen it at Barclays, since you're familiar with UK, what Barclays is doing, is they're worried some higher authority that doesn't know them starts taking money or blocking crypto on their behalf in the interest of their own safety, which I find to be nonsensical. So how do you respond to that challenge?
Yeah, look, it's an interesting question. We've actually partnered with a group called Malcolm Mitt, which allows us to stand up vaults in any jurisdiction. So any major jurisdiction. So that means, if I've got a Hong Kong investor that wants the assets to be stored in Hong Kong, we can stand up a vault for them in Hong Kong, right? Most people don't want their assets stored in Hong Kong with obviously what's happening with China and the changes there, but equally people don't necessarily want them stored in the US either. So actually the UK is an interesting point to have them stored. We are starting to have clients that want them stored in Switzerland. So we have choices by the Zurich and Geneva. We give that flexibility to our clients as well.
Is there a way to have it stored in some place that's not controlled by any country? Like, I'm going to make this up, Mars or the moon. I mean, is there a way to have that done, or is it just totally out of the question?
I don't know. Maybe Elon's working on something in that regard. Jeff Bezos is equally taking some time off. Maybe he'll discover some Bitcoin soon. But I think in seriousness, the problem that you are going to have if you are concerned about government confiscation, which is sort of where you're leading, Mark, I would say that it's very hard to escape that at this point in time, because the point is that we do run KYC and AML, and any regulated platform will need to run KYC and AML. And so if you're concerned about government confiscation, then you will have to take this bearer asset into your own hands.
Okay. Well, so in that case, I would say, if you're listening to this, if you want the bank level protection, because there is insurance, it sounds like too, this is a great place for you. I mean, they're publicly traded and listed, and there's all sorts of safety precautions, and it's not the Wild Wild West. I mean, it sounds like you've got this set up to be as good or maybe even better than a bank. And so if you're interested in that, then what a wonderful place to be. Unfortunately, not in the U.S.
Yeah, not yet. So we'll be looking at accessing the US, as I say, early to middle of next year.
Okay, so I've got some questions around exchanges in general. You've seen what Binance is doing with some of the things that are happening with them. What is your take on what exchanges are going to become in the future? Where do you see, you heading, and what's going to be possible with crypto exchanges that we're not seeing on any other financial platform out there?
I would say actually what you're going to see is a convergence more towards what you see on traditional exchanges. So today, on the large majority of crypto exchanges, if you're trading on them as a participant, you're generally trading against the exchange. So that means the exchange is running their own proprietary trading strategy against you. And that's not how exchanges work. Exchanges are regulators. Nasdaq is a regulator. That means that they regulate the markets and transactions that happen on their markets. So they're looking out for things like manipulation, wash trading, these sorts of things where people are getting taken advantage of by bigger players. And obviously we've seen that in some of the meme stocks lately with participants in the hedge fund space. So, the regulators are starting to get involved in these sorts of things, and that does include the exchanges themselves. The way we view it is that as an exchange, we shouldn't be market making on our own exchange. So we don't. And actually, we act as a regulator of the markets on Equonex to make sure that if there is any bizarre transactions happening, if there is any manipulation, if people are trading in a way that is to basically obfuscate the effective way that the market should be working and try to manipulate people, then we step in and we actually kick people off the platform for doing this sort of thing. So we've seen it with many of the exchanges that are out there. They'll actually manipulate the markets towards stop levels that they know they have in the system for leverage trades to trigger big moves one way or the other. And then they'll shut down the platform so that they can then mop up all the liquidity. I mean, it's quite shocking, some of the things that we see in this space. So what we've done is really build for the long term with the way that we see regulation panning out, but really trying to set a standard for the way that things should be being done. And that also comes through to what's being listed on the platform. Now, I've heard many examples of people going on to venues with Ethereum and Ethereum Classic listed on it and accidentally buying Ethereum Classic, which last year was 51% attacked 3 times. So it is a broken protocol as far as I'm concerned from a security perspective. And you have people listing both those assets on the platform. So for me, that's not about investor protection. And if we were talking about Nasdaq, then of course Ethereum Classic would have been delisted. But many of these platforms just have assets listed on them simply because they trade a lot of volume, not because they're trying to protect their investors or show good assets. So the goal for Equonex is really to become the gold standard. If you're listed or you have a token that's listed on Equonex, you can trust that that's a proper token, it's a proper project, it's got proper development, it's not been 51% attacked, and there's a proper project team behind it as well.
Okay. So, there's been some studies and research out there, and I know this personally, there's all sorts of fake liquidity and fake transactions. Are you doing anything from that perspective? How do you view that perspective? How do you view that, number one? And then number two, are you doing anything to kind of mitigate that?
Yeah, so we watch out for self-matching on the platform. It was quite funny in February, we had a market maker that had just come on. So obviously we bring on a lot of third-party market makers. And I got a call from someone on my team. They were like, have you seen the volumes on the exchange? And I said, no, what's going on? And they said, we've just done $50 million in the last 20 minutes. And this was when we were doing about $25 million a day on the platform. I said, what's going on? And has some algo broken? Is the price being distorted? They were like, no, the price hasn't moved at all. So we found out that it was this market maker had just come onto the platform. They literally just traded with themselves, like for $50 million in 20 minutes.
Yeah, but there's fees, right? You're charging fees for that.
Well, no, because they're a designated market maker. They have a zero fee structure. So we called them up. We're like, what are you doing? And they were like, oh, well, we thought this was what you wanted. No, this is not what we wanted. So yeah, it's a wild, wild west out there. I mean, the thing that they said to us, well, this is what we do on all the other platforms we market make on. I'm like, okay. So you start to peel back the onion of what liquidity in this space is really like, and you see that actually the amount of volumes going through is not really quite as much as what is necessarily advertised.
This sounds very secure, and I'm just wondering, are there any competitors that are anywhere close to what you're doing with the partnerships you have and the features that you have to really protect the investor? Is there anyone else doing this?
I would say from the listing perspective, we're quite unique. I don't see anybody doing that. Most listings that happen on other exchanges are about what's going to drive the most volume. I would say from a security perspective, certainly there are other players out there. I'm sure Coinbase is extremely secure. We haven't heard about any hacks over there. I think Gemini as well, very secure platform. But also from that regulatory perspective, i.e. being a regulator of our markets, I don't think anybody's doing that. So I think that's quite unique.
What do you think of the decentralized exchanges like PancakeSwap and Uniswap, and what do you see as risks to investors or traders there?
I think that look, it's remarkable how these have sprung up. I think there's we talked about it before. There's definitely a place for these exchanges, and certainly a lot of retail investors don't want to be onboarded to a platform that does KYC and AML. So these are the sorts of places that they're very happy to operate. Now, there's no oversight about what's being listed there, and obviously we see rug pulls happening on a regular basis where people are listing a project, it gets ramped, and they put all their money out, and it just trades at zero, and that's the end of it. So there's no protections that you would get with a centralized exchange, certainly like EQONEX. But I think that if you want to be accessing some of the newest and more interesting protocols in DeFi and doing an element of experimentation, certainly a place for it.
Okay, and are you supporting DeFi, and if so, how are you or the exchange supporting it? I think you've got a lending and borrowing component to it.
Yeah, we do. I mean, there's a lot of centralized lending platforms that say that they're a DeFi platform because they do borrowing and lending. I mean, that's not decentralized finance. We have a token that is effectively playing on some of the aspects of DeFi. So you get daily staking rewards from the token, as well as obviously utility within our whole infrastructure. But I think we are going to be looking at listing some of the more interesting DeFi assets as they come about. But it's always, we want to make sure that everything that comes on the platform has a way to be checked for criminal activity. And obviously, when we're seeing these ransomware issues happen, the way that they're getting recycled and passed through tumblers is generally in the DeFi space.
What is your opinion, Richard, of influencers who are creating their own coins?
These are the influencers that are creating a coin that sort of tagged to their personality or their work streams in the future.
Right, they're in circulation. They're being pumped by influencers, and you have, I guess, what I'll call gullible people who are investing. What is your opinion on that?
Yeah, look, I mean, this is exactly what we're protecting investors against, right? Is making sure that a project is a proper project. You may miss, by participating on EQONEX, you may miss the very early move in something because we like to see something get a track record before it gets listed on EQONEX. Look, this is a buyer beware, very Wild West sort of landscape in DeFi at the moment. It's emerging. It's going to take time to become more institutionalized. But this is the early space, and if you can look into these projects and understand them qualitatively, then I think there's a lot of money to be made. But I would say tread extremely carefully.
Got it. Okay, so we're going to wrap things up, Richard. But before we do, where can people find you if they're listening outside the U.S.? Where could they sign up with the platform and the exchange? Just give us all the details.
Certainly. So EQONEX.com, EQONEX.com. Our token is called EQO, EQO. My Twitter handle is at Richard Byworth, all one word. We have at EQONEX for the exchange and at EQONEX Group for the overall company, which encompasses that whole ecosystem that I spoke about before. So those are the various places.
Okay, and if they want to buy or invest in your stock on the Nasdaq, what's the stock symbol?
The stock ticker is EQOS, and the company name is DigiNex Limited.
All right. Thanks again. We appreciate you.
Thank you so much, Richard.
Look forward to seeing what else you guys have up your sleeve. I think you said within a year in the U.S., so we'll look forward to it.
Fantastic, Mark. Amanda, thanks for having me. It's been great.